Next topic is private company. See, we have gone through various types of companies, starting from one-person company, private company, public company. Then there are various relationship regarding companies, holding companies, subsidiary companies, listed companies, unlisted companies. See, for your examination, private company is very important. Now you have to highlight what are the essential features of a private company. Uh, there is no figurization of a private company. If you see in the case of a one-person company, if the paid up capital is maximum, if the paid up capital is maximum, I mean up till maximum, that is called 50 lakhs less than 50 lakhs. If the paid up capital is less than 50 lakhs or if the turnover is less than 2 crore, then one can continue its business as like a one-person company. But if it becomes more than that, that one-person company can convert into a small company or any other private company. One-person company comes under the category of a private company. Even small company comes under the category of a private company. But what are the essential features of a private company? I have said you in the previous classes, private company has three essential features which distinguishes from the public company entirely. Number one is restriction, number two is limitation, number three is prohibition. Now what is the restriction? Restriction in regard to transferability of shares. Shares are not freely transferable, whereas in case of a public company, shares are transferable. But there is an exception in case of a private company in regard to transferability of shares. As I have mentioned that in limitation there is 2 to 100. Maximum 2 persons are required for opening a private company and the limitation is 200. So 2 to 100 is the boundary where private company can carry out its business. Now suppose take an example, if a private company wants to transfer its shares, it can transfer its shares within this 2 to 100, not beyond that. If it is beyond that, then it should have changed to some public company. Public company where the company can issue shares by means of IPO, initial public offer, and then further public offer, and where there is an important ingredient to be present, that is prospectus. A public company is required to issue prospectus before issuing securities, and that prospectus has to be given to ROC and then to Security Exchange Board of India, that is SEBI. A private company can transfer shares by means of private placement, and private placement can only be done within that 2 to 100 scope, otherwise not. Next comes restrictions. What is the restrictions? The restrictions is there that public deposits are prohibited or restricted. Restricted in sense that the shares cannot be issued to the public at large. Private company cannot indulge itself into a stock market. A stock market is a platform where the public company issues shares, where the public company deposits its shares, and where the various prospective investors can invest by the means of a stock market, which is controlled by the Security Exchange Board of India. So it is a non-obligatory part on the private company to follow the compliances of Security Exchange Board of India, as it has a margin of shares. The margin of shares can be issued but within the scope of 200. So restrictions, limitation and prohibition, which basically differentiates from a public company. Thank you.